Hello and welcome to this lesson. So in this lesson, we're going to look at the entry rules for order block trades. So basically we have two entry rules for order block trades. So the first example we're looking at is a bearish order block. So we're going to look at the Australian dollar. This is the daily chart, that's our example. So the order block I'm going to outline here for our example is that one right there. So this is the bearish order block. It is the last up close candle before this down move. So the entry rule for order blocks are simple. We have the high or low of the order block. So if you're bearish, then it means you're looking at the low of that candle. That is our first entry point. Then the second entry point is the opening of that candle. So those are the two high probability entry points for the order block. So we are also going to look at a bullish example. So now to illustrate this, we have, maybe I can use that trend line. So this candle here is our order block. So when I say the low of the candle or the low of the order block, I mean the low of this candle right here. So let's outline that low. So the exact low, maybe you can get the coordinates of that, is 0.66510, 66510. So 66510 is the low of the candle. So that is order block low, which is an entry point. So that is the first entry point that you can consider for order block entry. The second entry point is the opening of that candle. So I can call it order block open. This is also an entry point. So let's get the exact opening of that candle will be. So I'm looking at the opening here. The exact open is 66592. So that is the exact opening. So that is our opening. So those two entry points. So you can see if I zoom in, actually, the market actually got to both of those two entry points. We have the low of that candle and the opening of that candle. So sometimes the market might not really get to the opening, but it might hit that low. So based on where the market is and where you are in terms of when you're executing, you just want to actually enter between the range of this low and that opening. Basically in between there you can grab your entry, because once we hit that low, sometimes the market might hit the exact low and then start reversing. So the most high probability I will say is the low of the order block. So those are the sum of the rules. And sometimes if you get the wick is too, maybe this, the wick of that candle is maybe too big, you can use between the low and the opening as your entry point when the market gets into that area. So basically that is an example of a bearish order block. So let's look at a bullish order block, just to outline those entry rules. So this is the pound USD, and the order block we're referring to here is this one. This is our bullish order block, this candle right here. So as we have already outlined, we can look at the opening or the high of that candle, which is, maybe let's get that exact high. The high of that candle is 1.28032. So 28032. So that is the high of the candle, and is the this is the order block low entry point. So that's you can see actually in this example we just hit the high. Sorry, this is the high, order block high, sorry. It's a order block high, which is the high of that candle. You can see we hit that high to the point and then the market reversed. So the other, of course, alternative entry point is the opening, but to always begin with the nearest, which is the nearest to price. So just begin with the high. So the opening of that candle is 0.27781. 27781. 781. So this is the order block open. Is the order block open? It's an alternative entry point. So those are the two entry points or entry rules for order block trades. and you want to make sure that you're entering either between the high and the opening. Those are the high probability areas. So sometimes the market might hit that high and then reverse, and sometimes it might enter and hit that opening and then reverse. So basically that's it. That's how you enter order block trades. Thank you so much for watching, and I'll see you in the next lesson.